In a bit, we'll just talk about what some of the analysts on the street are saying about this. But before that, Shilpa, one more follow-up question. And separately, there's another development, right? Swiggy, Zomato's arch rival, is seeing a sharp markdown in terms of its valuation. So what's behind the numbers here?
Yeah, so Invesco, which had led Swiggy's funding round last year, that has slashed Swiggy's valuation to about 5.5 billion. This is according to filings as of 31st Jan 2023. Now remember, this is not the first but the second markdown by Invesco. Invesco had reduced its valuation of its holding in Swiggy in October also to about $8 billion. And the revised valuation of about 5.5 billion is almost half, or rather 48.6% lower from the Jan 2022 valuation that it had given of $10.7 billion. Now, this is when, remember, Invesco had led Swiggy's 700 million round, and that's when the $10.7 billion valuation had come. Now, remember, this markdown in valuation comes at a time where we're seeing a slowdown in food delivery. Investors are becoming more particular about unit economics and the path to profitability over just larger valuation numbers. And in fact, the slowdown in food delivery also forced Swiggy to fire about 380 employees earlier this year as well. So there is definitely a markdown, and that comes on the back of the slowdown that we're seeing, and also the larger focus that investors want startups to have on profitability.
Thank you very much, Shilpa, for explaining that. Quite a sharp reduction in the valuations, practically halved from 10.7 close to about 2 years back, now down to $5.5 billion.